call up Keith Grose from Plaid, and we're going to talk about the next generation of investors and how to engage them with transparency. Welcome, Keith.
Awesome. Thanks for having me, Mauricio. Great to be here.
Good. So let's start a little bit, talk about a little bit of your background. How did you end up with Plaid and how that kind of blends into Web3?
Yeah, absolutely. I was in San Francisco working at Google, and my first 3 years there, I was working on helping internationalize and expand what became their fintech products, so Google Pay and Google Wallet. And during that process, I fell in love with fintech infrastructure. I also heard about crypto for the first time. We were looking at what are the rails you need, and it was incredible how complex it is to actually build the same user experience across all these different markets. And so I started getting really interested in fintech and how I can get more involved here. I started looking at all of these applications in that first wave of fintech apps that were growing then in the US, Robinhood, Coinbase. And I kept seeing the same infrastructure players behind them, and one of them was Plaid. And so I got in touch with them. They said, you know what, we're actually looking to expand to Europe, and we want someone to come in and help us do that. And the rest is history. I moved here 4 years ago and have been helping Plaid scale since then.
That's good. And in the world of investment, I mean, we know that moving money into and off investment is one of the challenges.
Right.
But how are you guys seeing the engagement through Web3 with this? We're talking about the new generation, but there's a few generations that we're going to cover in terms of where crypto's present. How are you seeing that distribution now?
Yeah, it's interesting. We've done some research, in fact, some that's just been released today, but there's a huge gap across generations in the understanding of crypto. So you have more than half of millennials and younger who say, I know how crypto works, I want to own crypto, I really love it. And then you have less than 20% of baby boomers and older who say, I understand crypto at all, and actually 80% of them think crypto is just a trend. And so that gap is pretty massive across generations. But it also then, when you look at the ownership of crypto, you've already crossed the 15% threshold in the US and the UK for the entire population. And what that tells you is, in less than 10 years, this has become an asset class. It's a big asset class. But it also has a huge amount to go for it to become at the same level of adoption as stocks and bonds and the traditional asset classes that you think of in finance. And I think that generational shift in both understanding and adoption is going to be one of the really interesting trends of the next decade.
And we're talking about how to accelerate some of these things, right? So there's some awareness in an older generation. There's some desire in the younger generation that might not exactly reflect the level of literacy, if you will, of these. What is the path to accelerate both the current older generation of investors and better prepare the younger generation of investors around these new asset classes?
Yeah, I'd say two things. One is a great user experience. We have to move away from something that only engineers and crypto native people can use to everyone feels comfortable using this. And the other one is education. And so an example there is actually in a lot of new experiences for any application, but especially financial applications where people are trusting an app with their future financial health, it actually is more important to create a slow process that actually educates the user with every step than to say click once and you're done. And so you as product managers and as team members building fintechs have to think through, where do we emphasize education? Where do we emphasize speed of execution? And I think finding that balance is what's going to actually accelerate the adoption of crypto.
Right. Maybe we want to go a little bit deeper into what's that path? I mean, if you're a fintech, say investment provider or a fintech in the space, what is the maybe prescribed route to get to engage with these investors and maybe create that learning opportunity as they go about doing the investments themselves?
Yeah, absolutely. I think the first part where that starts is the onboarding experience, which is where I spend a lot of time and our company spends a lot of time focused. But if you think about the things you need to do as a crypto platform to convince a user to actually sign up for your service and buy crypto through your service, you need to IDV them, you need to verify their affordability, you need to make them comfortable linking or providing fiat to you, doing a conversion, and you need to tell them what's happening along the way while making it feel like a great, exciting experience. And so having that optimized onboarding flow is key. And I think that's something where you've seen leaps and bounds happen across the crypto and fintech ecosystem over the past just 5 years. But I think there's still a long way to go to make that a really smooth, exciting experience. And so for us, I think it's making it a great experience from both a haptics and a UX perspective, but then on screen telling the user, why are we doing this? Why are you taking a selfie, right? Taking a selfie to check you're a real person and liveness.
So it's not just GDPR, you're explaining the reasons.
Exactly, you're explaining this along the way, and I think providing that in a really, like a well-functioning funnel is what makes a user get to the point where they're at that magic moment, whether it's instant trading or investing, whatever it is, and they're excited about it now because they've gone through this great experience from the first time they clicked on your app. And so I think really spending a lot of time focused there on education and on optimizing that is the most critical part in providing comfort to users.
And what's the current perspective? I mean, we're talking about crypto and crypto just spot buying as a form of investment, but there's all sorts of other instruments that are now available in decentralized finance, for which buying a cryptocurrency is the first step to get into this.
Right.
Is there any, from your research, is there any specifics on where these trends are going in terms of, yes, they're interested in cryptocurrencies as a means to get somewhere, or it's just the final investment thesis? How do they play between these new modalities that decentralized finance now kind of offers?
Yeah. Maybe to tease that part, I guess we'll talk a little bit about the differences there, and then go into it. I think if you think about why adoption has varied so much, both across generations, but also across ethnicities, for example, like minorities hold much more crypto than other ethnicities. And part of that is, I think there's a sense of, this is something new and I can get in on the ground floor of this versus the established path. And so with DeFi, I think the key there is being able to educate users on what is the benefit of decentralized finance, and then creating a user experience that actually follows through with those benefits. And right now, for a lot of applications that I go through and test them all the time, you're still in a place where they say, go write down your passphrase. And people are like, what is this? What happens if I lose it? And you're gradually starting to now get to an awareness where people understand what that means, the benefits, the pros and cons of having that level of security. You own your keys, you own your coins. But if you lose your keys, you lose your coins, right? I think creating that experience in DeFi in a way that educates people on why you're doing something and the benefits is what's going to grow that adoption across all different generations and all different segments of the population. And you're still, I think, in very early days for DeFi. I think the majority of crypto users are still onboarding through centralized exchanges, and that's their first experience. But then centralized exchanges are actually helping bridge this gap along, because they've been focused on creating this great user experience in sort of the fintech-y side of crypto. But then they're also now releasing DeFi wallets. And so you think about players like Coinbase, Crypto.com, they actually are moving from just being centralized exchanges to also having a decentralized exchange portion. And I think that type of transition is actually helping the more Web3 only and Web3 native ecosystem develop as well. Because they're now getting the benefit of users are being educated through something they're already familiar and used to, and now able to comfortably go to a Web3 application and know what's going on and sign up for that for the first time, where maybe they weren't comfortable 5 years ago doing that.
Oh, yeah, I wasn't comfortable 5 years ago
I don't
doing
think
that.
many of us were.
But one thing that kind of struck when you were saying about this, the centralized exchanges coming into this DeFi space is that there's obviously a sense of, if it's in a centralized exchange, I'm actually outsourcing my keys and my money. And when they move that to that new scenario, there's all these concerns. That reality also impacts the way that regulators see who owns what in the context of custody and in the context of actually going into a DeFi dApp and doing something on your own behalf. So what is the perspective between the existing massive investor generation, the future one, when it comes to their understanding of the role of the regulators in what they do with their money?
Yeah. This is one that has shifted dramatically in the past few years. So what we're seeing now in our research is 80% of people in the US and the UK, slightly higher in the UK.
80%?
80% want more regulation in crypto. And so I think you're starting to get a sense of...
we don't have a generation of degenerates.
Yeah, exactly. And I think part of that is because you've seen, I think anyone who's been following this in the news, you've seen a lot of big issues in just the past 6 months and year, right? Collapse of hedge funds, collapse of Celsius. And so I think there's a sense among users of, this is really interesting, but I do want to feel safe. And so I think balancing that through user experience and technology, but also through clear rules and regulations is the best of both worlds. And it's interesting that that is the place where you actually are seeing, across all generations, people actually align there.
Right.
Now, I think the tough part about that is every market, so technology, right, the internet is borderless and crypto is built on that whole concept. But you're now in a place where if you're on a device, you're operating within the market of wherever that device is and the regulations of that, right? And so I think the issue you have as a crypto platform now is every regulator in every market is starting to look at crypto and how you regulate it safely, but they're doing it differently. And it's really hard to provide a seamless user experience across all these different levels and stages of regulation. And that's where I think it's really important to look at infrastructure and platforms that can help you balance that as well. So I think that's the trickiest part right now is if I have users in the US, Australia, Canada, UK, and they all have slightly different regulations and regulatory requirements, how do I provide a great user experience across all of that? That's hard.
Well, I would derive from that the difference in approaches across jurisdictions might be also a cause or potential cause for systemic risk, because if you're, as a company, if you're doing regulated arbitrage and moving your business around, and obviously users don't know where you're operating from and your framework, etc., what you're creating is more complexity, not only for the companies, but also for users to understand what's going on. So yes. What is the prospect of actually kind of level setting this still within the regulatory space? What do you guys are seeing?
I think we're well along the journey there. So I think we're in that process of finding equilibrium. And if you think about it, stock markets and equity markets went through the same thing, right? And so I think you're at this place where the years of regulatory arbitrage and companies having no headquarters, I think, are done. And I think over time, regulators are starting to look to each other and see, how are you regulating crypto? Do I think that's better or worse than what I'm doing? And I do think you're going to get to a place of equilibrium over time, relatively, where most of the major markets will have shared stances on how you think about crypto. I think it's going to take 10 years. It's going to move at the speed of regulation, but we're well on that journey already.
Yeah. I saw a paper from two economists of the IMF actually manifesting their concern that regulators are not moving as fast as you said. And I really think that not only the speed in which they understand these new paradigms and incorporate them into frameworks is going to change, but also how they position themselves, right? And we were talking about writing a regulation on a PDF or posting that into a website. Smart contracts don't care about the website. Smart contracts care about what is in an oracle, what's in the blockchain, what's in the protocol. So to some extent, and it's my hope that we'll see some of the regulators actually starting to dip their toes into the blockchain or being on chain with the presence, maybe using the data, right? Because this is all data, right? Everything we're talking about here is just, databases and everything. But also maybe providing some portion of the infrastructure so that maybe Plaid can be increasingly more crypto, increasingly more Web3 without running the risks of regulatory arbitrage. How do you see the role of the regulator in enabling that? Because I understand that there's differences in approach and there's differences in nuances, but it's not only that, it's how much involved the regulators are in fostering that innovation. What is your experience across all of these geographies you're playing with in interacting with the regulators? Where are the most friendly ones?
Yeah, that's interesting. Well, I think it's hard to say friendly versus unfriendly because all regulators have the same goal, which is keep consumers safe and keep stability in markets. But I think the ways they approach reaching those goals are different. But if you think about where regulators are now, they're looking at the protocol level and thinking, how can I regulate this safely? This is in the US where you see lots of discussion around what protocols fall under the definition of securities versus not. Where do they sit? Is this FTC, SEC? So you're having that discussion in some markets. But I think the by and large focus of regulators is the easiest place for them to regulate crypto today is when a user enters the ecosystem, which is, again, that onboarding experience. And so this is where you're starting to see crypto go from an era of anonymous wallets to we want to see IDV. We want to know that there's anti-money laundering checks going on. And I think that is the focus of most regulators, and that's where you're starting to see equilibrium today. I think it's going to take a long time to figure out at the protocol level what the equilibrium regulation is, because that's going to vary by market. But I think this focus on how to safely bring a consumer into the ecosystem is the place where regulators have the most familiarity, because it's the easiest to translate from other traditional equities and investments experiences. And it's the easiest place to regulate, because you regulate the app store, you regulate the platform itself.
There's a centralization point where you can actually enforce some of that regulation.
Exactly.
Right.
And so that's where you're starting to see this focus.
Got it. Yeah. So we have a couple of questions from the audience here. One is, again, about education. So UX education is one type of education. For the next generation, how do we actually get this into the mainstream conversation in schools and higher education? That's even a bigger question than just financial literacy,
that's
right?
a great one. But I think of this as just the sort of next click of computer science, right? Computer science is actually a relatively new study in most schools, but it's now one of the most popular majors at almost every major university.
That's true.
And that is where I think crypto is going to have a clear follow through as courses. It's already offered at most major colleges and universities. There's some type of course around cryptography or cryptocurrency. Or Bitcoin, and the other place is economics.
Harvard, I think, had more people signing up for the Blockchain 101 class than Computer Science 101 class this semester, I think.
And
So
again,
that's an indication.
That ties to the data we were talking about early on, right? About how popular this is among millennials, Gen X, Gen Z.
That's right.
The folks going to university right now are really excited about crypto.
Yeah, we did an open mic night a couple months ago, and one of the participants said that we should be educating broadcasters, and I was like, why the hell? And I was like, that's kind of true, because if you think about, like, you mentioned Celsius recently, right? So Celsius was a centralized agent, lender, that was operating with DeFi dApps in the back, but they were centralized. And the news that went out was like, DeFi operator Celsius, and like everyone is like, oh, Celsius is DeFi, where it's not, and that is the broadcaster. And once that becomes the headline, that becomes the truth, and then it trickles down, and everyone kind of plays around the same mistaken information. I'm going to say fake news, but mistaken information. And obviously, the broadcaster has a big responsibility, so maybe bringing some of that to the mainstream also means that the news people need to be, and I'm not talking about the specialized journals and journalists and portals, because we have already have a great crypto media, specialized media, but the mainstream broadcasters probably are not well versed into what all of this means, and some of them are blatantly against crypto for whatever the reason. Maybe they lost money with Celsius, I don't know. But yeah, I think that's another type of education that goes even beyond investors, but also how do we prepare the rest of the industry to actually accommodate our remaining shortcomings, I want to say.
That's right.
The other one is, what's your perspective on non-custodial wallets? If I lose my money and have no recourse, is that okay? The alternative is centralization, which has issues too. Just for kind of level set in terms of vocabulary, non-custodial wallets or self-custodial wallets are the Web3 wallets, as we say it, are the wallets where you as a user handle your private keys to the assets that live on the blockchain. So that's how we describe these wallets. These are not the wallets that are on your centralized exchange, such as Coinbase, Kraken, and Crypto.com, where they have the custody of your keys on your behalf. So that's the difference. So what's your take on that?
I think I'll go back to something I said earlier about the education, the user experience, which is, I think they both have pros and cons. What's most important is that people understand and can make the choice for themselves. So I think there are definitely individuals and situations where owning your keys, owning your coins is actually really important to people, an individual. And think about places like Venezuela or something where someone wants to move assets across a border and there's no way to do that because your currency is being devalued. That's where owning your keys and being able to remember a passphrase is actually something that's really important to people. There are other situations where you would actually rather trust a centralized entity with your security than you remembering the piece of paper where you wrote down your passphrase when you signed up 2 years ago, right? And so I think the key thing for consumers is to have very clear education on the pros and cons of those choices, and then letting them make the choice. but making the repercussions very clear. And I think that's something that you've seen a lot of improvement over time. And this is also where I think infrastructure and onboarding players have a key role to play in educating users and having them safely figure out, how do I onboard onto the service? How do I bring fiat into crypto? But then more importantly, who controls that crypto going forward and how?
Yeah. And one thing we were talking about the generations, right? The existing, the boomer investors and the millennials and Gen Zers now. There's one thing that non-custodial or self-custodial wallets still lack is the inheritance control, right? When the investor unfortunately passes away, what happens with that portion of their investments that are now, because if they're holding the private keys or the passphrase or whatever it is, and they're not around anymore, what happens with all of that crypto that now, who does that belong to? Because the owner of the keys is no longer around. So there is a big portion of the UX infrastructure in the context of non-custodials that have yet to be resolved. I know that there are a few projects going after this specific challenge, but it's still not widespread. And obviously some of the considerations when you're talking about generational wealth being built across crypto is how that trickles down to the younger generations as it happens, because obviously you have to have ways to kind of handle that. Next one is, how do you see the millennial investor? Has their view on how to smartly invest been ruined by crypto boom and bust, as well as the current market bust in stocks? Maybe we've kind of went through that, right? It's much more interesting to the younger generation to go to crypto, as research has shown, right?
And I think the other concept there is there's boom and bust cycles in any market. That's how markets work. They are more volatile early on in the market because there's one, more speculation, but also two, there's less liquidity. And so you have higher highs and lower lows. I think as adoption grows, you will see smoother boom and bust cycles, but this is not something that's unique to crypto as we're seeing right now. It happens in every market as well.
And macro circumstances aren't exactly helping in that respect.
Exactly.
Question from Rich. What space do you see first transactions happening at scale for the general public? What space, probably in terms of demographics? What part of the economy?
I'll go back to what I said earlier, which is I think for crypto in particular, you see first transactions still happening majority through centralized exchanges. And this is where people are trying to say, I want to invest 1% of my assets into crypto, and my most comfortable place to onboard is a name I'm familiar with or that I've seen advertised at the Super Bowl, whatever it is.
Or owns a stadium.
Yeah, that owns the stadium, exactly. And so I think that's still where you're seeing predominantly people enter the ecosystem for the first time. Mm-hmm. But increasingly you're seeing people have multiple wallets and multiple interactions with the crypto and similar to fintech ecosystem as they get more comfortable. So this isn't necessarily a place where I only have one interaction. I might have 2 or 3 wallets across different experiences. I might be trying out a Web3 native messaging platform like a Farcaster, and I might be buying some coins on Coinbase, and I also have stocks over here in free trade, and I have a pension with PensionBee. So I think it's following that same sort of satellite experience that you see in fintech, which is the best apps for any one experience are going to win that experience. But today, if you're talking about crypto specifically, it's mostly through centralized exchanges that the first interaction happens.
Got it. So one of the aspects of this kind of topic is how important transparency is for this younger generation, because obviously we know that company disclosure on the equities market is, it's every quarter. You never know what's going on in real time. There's obviously, you need to keep abreast of the news, but that is additional work if you're an investor. In crypto, we have more timeliness of information, but also way too much information to sift through. So how is transparency playing a part on this kind of journey to adoption? And is it a feature or a bug in the eyes of the investor?
I think transparency, I'll answer your last question first. 100% a feature, not a bug. I think the most transparent platforms build trust. If your brand builds trust, your brand will be more successful over time. Investor alignment with transparency is very clear in that sense. I think the key is to figure out how do you implement transparency. It's a great buzzword, but what does it actually mean? I'll talk about some different experiences. I talked about the onboarding a little bit, which is where I spend my time focused. And that's, again, where you're trying, every step you're going through, you're saying, why is the user doing this?
This is what happened.
Why are you linking your bank account? You're linking your bank account to verify your identity and to move money. Why are you taking a picture of yourself? To verify your liveness and that you're a real person. The same thing then applies to experiences once you've already started using the app. And I'll go with traditional equities trading apps as a great example here, where I think a lot of new generation's first experience with buying equities is through a free trade or Robinhood or one of those applications. And so your first experience might be buying a stock that you're very familiar with. I'm going to buy a fractional share of Google or Apple, whatever it is. But then over time, these applications will start to educate you on what are all the different types of trades you can do. What does it mean to have a stop limit? And so I think figuring out where you put that in a user journey and build education over the life cycle of experience with that app, that's where I think transparency really comes to play. And I think that same experience has a very clear analog in the crypto ecosystem, where it's one thing to buy your first crypto. It's another thing to know, what does it mean to stake? Who controls that? How can I actually set stop limits? How do I track price alerts? And that type of experience, you don't want to dump on a user all at once the first time they're using an app. You want to build that over time as they build comfort with your experience. And that's what I think the best UX is doing, the best UX designers are doing in the space today.
So transparency as a design imperative across the journey of the investor would be probably the way to kind of play it out. Now, there's obviously, we're talking transparency in light of the existing public blockchain infrastructure, which is everyone is all pseudonymous, so we don't know who you are, but we know there's a wallet there, and all of the data is there as well. Is it something that we will be able to, because of the privacy rules and et cetera, is this something that crypto as an industry will be able to tackle, and or will we see more privacy being discussed in the space? Because I think if you're a massive investor, you don't want to have your wallet exposed and people knowing exactly how much you have of any type of asset. So how do we balance privacy and transparency and then use that as means to bring more people in?
So I think privacy and transparency are inherently part of this ecosystem for some individuals and some ways of approaching it. I think there's a lot of different ways to handle this. So you mentioned large investors, if they want to put significant amounts of money in crypto, you don't want to know what that wallet address is publicly. Actually, a way I think you're going to see a lot of this happen is big investing platforms and wealth advisors will start to offer crypto as a service. You're already seeing this with Fidelity, Schwab, some of these big players starting to offer crypto as a service to their investors. And there's not going to be a public wallet address that they're sharing as part of that. So I think that's one way that privacy is going to get exposed.
So custodial will play a part in further adoption for large investors.
Yes, and then I think you will also have technology built around it where people might have nested wallets or trusted wallets that aren't their main wallet, that type of
Maybe
experience.
ZK will play a part in privacy
Exactly,
as well.
that type of stuff as well.
Got it. So we're about done. So any parting words, Keith?
I think I'll go back to the beginning. The best way to engage and grow the next generation is transparency and building trust. I think the way you do that is by having really clear, high education onboarding experiences into new ecosystems. And I think that's where Plaid and other players are spending a lot of time focusing. And then I think it's building that trust over the course of a life cycle. And I think you're still in early innings of where crypto adoption is going to be 10 years from now. I think it's going to be much higher than 15% of Brits that have crypto. I think it's early days in that sense.
Awesome. So let's build.
Let's do it.
Thank you.
Thank you, everyone.
Thanks, Keith.